Meanwhile, Wall Street looked set to celebrate new record highs in early trading, but U.S. stocks just couldn't hold on to those gains. Despite the disappointing close, both the Dow and the S&P touched records early in the day. The Dow surged past the 16,000 level, while the S&P crossed the 1,800 milestone. But those gains were short-lived as investors said some stock valuations were too high. And billionaire investor Icahn's concerns also pushed equities lower. He said he's very cautious because he expects a big drop in the stock market. Icahn believes the better-than-expected corporate earnings reports are fueled by low interest rates. And for more on today's milestone crossing rally, we're joined by Michael Levas, founder and managing principal of Olympian Group. Michael, thanks for joining us tonight.
Thanks for having me, Michelle.
So, Michael, during Janet Yellen's Senate confirmation hearing, she said that the Fed's policies, particularly the $85 billion bond buying program per month, can continue to help the market, the economy, and that's encouraging investors that she will continue the stimulus. So is this really a Yellen-fueled rally at this point?
I don't believe so. I think that her consistency with her statements and saying that she will continue, I think is a given in the marketplace. There are other factors that I believe are generating the gains in the market, and it's not really what the Fed is saying, though it is helping.
Okay, what are those factors?
Well, obviously, I think we've mentioned it before. The major pensions here in the United States have to pay their pensioners 7.5%. So what's happening is they're buying the debt of all the major U.S. corporations that are listed on the S&P, the NASDAQ, the Russell, et cetera. And what that means is those corporations have incredible amounts of cash. So we're seeing dividend increases, we're seeing buybacks, and we're seeing M&A. And that will continue for the foreseeable future. That's really what, to me, is propelling this market.
Well, it's interesting that you mention the buyback because there is a lot of concern that this rally is fueled by companies buying back their own stock. According to Reuters, stock buybacks are 93% higher than the average for the past 10 years. So what are the factors, other than the pension fund that you mentioned, that are fueling companies to buy back their own stock? And what does that mean for the market? I mean, companies can't carry on buying back their stocks indefinitely.
Well, I mean, that's very true, but they can do it, and it also helps. Don't forget their balance sheets. It increases the balance sheets. It makes them look much better than, you know, what they were prior. So that's why I believe that this is kind of a resilient market in that respect, and we will see it. The dividend increases. They're passing that money on to investors, and of course they have cash to buy other companies. And that's not going to be just here in the U.S. That will really be all over the world. So we'll continue to see that buying spree that they're on as of late as well.
So, Michael, are you at odds with activist investor Icahn? He said today that he is very cautious about the stock market and that he sees a big drop because earnings at many companies have been fueled by more low borrowing costs than management's efforts to boost results.
Well, I must say that I think Carl is a very, very smart man. I have a great amount of respect for him. I've been saying this past week to a number of my traders that I think it's time to take some money off the table. And I did that exactly today. And then one of the traders from New York called me and said to me, Michael, Carl Icahn made a statement about he's very concerned about what's going on. So we saw that dip. Obviously, we're going to have corrections. That's healthy in an ongoing bull market. So I think what we're seeing is just a natural reaction by investors to be cautious and somewhat defensive in this type of marketplace.
So, Michael, what is the biggest risk to the markets right now? Fed tapering, stock buyback stopping?
No, I think it's the unknown. I think something that triggers the unknown, something that really nobody's expecting, could trigger something, much larger than say a 2, 3, 5% correction. If something happens on the geopolitical front, for instance, that could trigger something. If something happens in the political front here in the United States that was unexpected, that could trigger something. So these are all the different types of factors, I think, that really weigh up with investors and help kind of contribute to the correction mode.
Okay, thank you very much. Michael Levas, founder and managing principal of the Olympian Group.